What's up, everybody? Thanks for hopping on this free training. I'm doing a series of whiteboard videos where I want to do things a little bit different. You know, a lot of people out there want to just share their charts and want to go about it with kind of a screen share. And I did that for a long time. I still do it. I do it every day. But this is a great way for you to get to know me a little bit better, for my philosophies about the market, which I think differs me and makes me unique from a lot of traders and a lot of mentors out there. So what this video is about is my #1 trading strategy. I'm going to go over it. It was my aha epiphany moment in trading, and that's when I realized that everything, maybe you know where I'm going with this, is connected. And by everything being connected, you know, I talk about this all the time. Maybe you've seen it in my previous video. I talk about the flow of the market, right? So, and once you can grasp this, like it doesn't happen overnight, but once you can grasp this, I might look at this every now and then because I got some open trades going. But once you grasp this really simple philosophy about the market, man, it's going to be a game changer for you, 100%. I teach this in my training, in the advanced section of my training too. So for all the people that are in there considering being a part of my group and learning from me, this will be a nice prep for you for this. So I'm going to talk about 3 main components of this, and it's really what ties everything together. And you know, it's how that you realize that these fundamentals, these market fundamentals, once you can grasp them, then you can truly use the technical analysis, which is the graphs that everybody wants to learn how to do, trend lines and stuff. And that's great for sure. I use it obviously every single day. But what's important is that you know what to trade on a single day. So that's really the hardest part for me as a beginner. When I started, was I would be like, okay, I'm trading today, sit down at my computer and be like, now what do I look at, right? Do I just go through each chart? And the thing is, this is a great barometer to like know, well, what am I going to do today? What am I actually looking at? So first thing you're going to be looking at is the S&P 500. And so maybe already you're like, I don't even know what that is. I thought I was going to learn about USD JPY, Euro USD. I want to learn about Forex. But you don't have to be trading this to use this as a compass, right? That's a great way to look at it. I've actually never said it like that before, but the S&P 500 is an amazing compass for you to use to find your way in the market, to know what is going to be going on, right? To know what the actual market, and this is super important. You might want to write this down. Take notes, man. Take notes in this. It'll only serve you better, especially as you kind of progress through what I have to offer in terms of training, in terms of my own mentorship for you in the future. So the market sentiment. And once you determine the market sentiment, don't have enough room, but once you determine, okay, I've looked at the S&P 500, is it up or is it down, right? That's what it's the market. If you can really start to simplify it, and that's what I really try to do, is simplify things. So we want to determine, is it a bull market or is it a bear market, where there's some indecision going on, where there's some uncertainty, and I like to call it risk off. I'll get into why I call it that in a second. So, but once we determine, we look at the S&P 500, we determine, is it up or is it down? Then we can determine our market sentiment. So if it's up, it is a risk on type of scenario. okay? But if it's down, risk off. And so what I mean by risk off is that, or risk on, what I mean by risk is, are investors looking to invest their money into riskier assets like stocks? Are they going to be like, the economy's doing great, I'm going to buy some Uber stock, I'm going to buy some Netflix stock, I'm going to buy some Microsoft stock? And so that's what I'm talking about. And like I said, you don't have to be buying shares of Microsoft to trade Forex at all. But you can look at these things and look at the average of them. S&P 500, the 500 comes from, it's the mean average of the top 500 companies on the U.S. stock exchange, okay? So it's a great mean or an average of what's happening overall in the markets, right? So, and by determining that, you can determine whether it's risk on, risk off. And to get back about what I meant by risk, are investors looking to invest in risky assets? Are they like, oh man, okay, I feel good, the economy's going great, we're not in any wars right now, I'm making money, I want to invest it? Or the opposite of that, right? So let me just use an example. This is an extreme example, but 9/11, right? Which, tragedy, right? So were people looking to invest their money when that happened? No, right? So, or any type of war, right? World War II is a great example, because not too long before that, we had the stock market crashed coming out of a depression. It was only after the war, the war effort kind of created an economic boom for the country, and then people started to make more money, started to become secure, and then started to invest and started to buy houses, and that was in the 1950s and 1960s. So in some time of economic uncertainty, war, recession, then we're looking at risk off. Right. So I think right now, when I'm shooting this video, we're coming into big risk off period, because of a lot of economic things going on globally, a lot of unrest, and then the current president of the United States is having an impeachment ordeal right now. I don't have to say who he is, right? Most of you already know. I'm not trying to be political one way or the other. I'm just talking about what that creates is uncertainty in the market, uncertainty in the minds of investors. Like, I don't even know if I want to start investing right now, right? The stock market, the S&P 500, at the time of when I'm shooting this, is at all-time highs right now. How long can that last? And I think, we're going into some big risk-off sentiment into the coming year, because of the fact, about the impeachment, about right now there's a big China-United States trade negotiations, and a lot of news dropped today that maybe it's not happening as good as people think it's happening, or maybe the trade deal's falling through altogether. And what would that create? That would create a risk-off type of environment. So say, just as an example, that it's a risk-off type of environment. Right, so all this stuff, maybe Trump gets impeached, stocks take a nosedive, and so then we've determined, right, because the S&P 500's dropping, we're like, man, investors are taking their money out of the stock market. What are they doing with it? Where are they putting it? There's three main assets to look at. So if you can start to determine S&P 500, is it up or is it down? Okay, what's the market sentiment behind that? Is it risk on, which would mean, is it up? Is it everybody's happy, everybody's buying, or is it risk off? People are pulling out. People are like, I don't know what to do with my money. And say it's the risk off scenario. Where are people going to put their money? Into safe haven assets. Safe haven assets. So, which would mean somewhere where it's a lot safer to put your investments, to put your money. And I don't mean in the banks, right? A lot of times, at least the last big economic recession in the United States, the banks ended up failing, right? A lot of people lost a lot of money, lost their homes, all kinds of stuff. And I just thought about it right now. Just to tell you something about me as a mentor and as a trader, tying these fundamentals into my technical analysis, one makes me, I think, it's not like I'm the only person doing this, but makes me unique, and it gives me a very different angle on the market. And it's made me pretty successful doing this too. So at the same time, it's been effective. Let me put it that way. So what are our safe haven assets, right? So we've determined it's risk off. So now we can narrow the field down. We can narrow the things to look at down. We can narrow what we're going to trade down, what we're going to look up in our trading platform. There is let me take that back. There's 4 major ones. A big one, and one of my favorite things to trade, is the yen, right? So risk off would mean strong yen. Okay, so this is big. So that would mean UJ, US dollar, JPY would go down. US dollar JPY would go down. That would also mean Euro JPY would go down, NZD JPY, AUD JPY, GBP JPY, all for the most part, not always across the board, but for the most part, we're going to be looking at strong yen. Okay, so and then once we determine that, we're like, man, we got a risk off type of situation, yen starting to look strong. Then that's when we want to get to our technical analysis and be like, oh man, I know where this is going. Now I can narrow the field down even more, and then use my technical analysis skills to find the best setups, to find the best entry, and then we can tie everything together. The other side of this is, say it's risk on. Risk on, stock market is up. S&P 500. S&P 500 is up. We have risk on type of situation. So US dollar, Japanese yen is going higher. Weak yen. So that means we're going to have a weak yen. It's risk on. US dollar JPY is going higher, or maybe it's Euro JPY or CAD JPY would be a big sign of risk appreciation in the market. AUD JPY for sure. So another one that we'd be looking at. So it's risk on. The other risk asset I'd like to talk about, there's 2 more, is the franc, or CHF, right? That's its symbol, CHF, which is a Swiss franc. Big risk asset, and this one is big during times of war. If you see some sort of war breakout or terrorist attack, that would be a more thing for the Swiss franc to appreciate, which would definitely be risk. Well, not 2 O's, risk off, which would mean US dollar, we'll just use this as an example, down, right? Strong franc, potentially S&P 500 down. And so this would be the perfect scenario for the risk off, right? So, but the thing about the franc, it's personally not my favorite thing to trade. in this type of situation because the Swiss National Bank is known to step in and, you know, kind of be an intermediary to referee, you know, to really kind of manipulate their currency to get it where it wants. So it can be difficult to trade and can move super fast the other way, even despite some sort of risk event. So I want to talk about now the ultimate risk off asset, the ultimate safe haven asset. Risk, if we're looking at risk off, and if you're a new trader, if you're just starting to get into it, I bet or maybe you've been around for a while and you got burned by it. I think a lot of you might know where I'm going with this. Gold, right? So everybody wants to start trading gold at first. Hey, I do too. It's just something alluring about it. It's just an ancient thing that's been a tantalizing force for human beings since Egypt, right? So gold, Rome, Greece, I mean, it's a precious, precious commodity. And that's why it's the ultimate risk off asset, because look, man, S&P 500's taking a nosedive. Maybe people are investing in bonds, which really starts to kind of complicate this a little bit more. But you can look at it this way: if people are buying bonds and bonds are appreciating, then you can look for gold to also be people to be buying gold, right? So gold is the ultimate safe haven asset. Our symbol for gold, XAU, USD, risk off, so you can be looking for this to move higher, right? And strong gold. And what's helped me in trading a lot is to really just start thinking about this stuff rationally and just trying to make sense of it on a rational level, on just kind of slow it down, make it a lot less complicated. And think about it this way, man. If your Netflix stock goes from it's worth $100 and it goes to 50, people are going to pull out and be like, I want to invest in something where I know it's not going to depreciate to zero, and gold is the thing, right? I used World War II as an example. During World War II, Nazis just started to stockpile gold, right? Because of the intrinsic value of it. It's not going to go down to $50 an ounce. It's not going to go down to $100 an ounce. Right now, when I shoot this, it's at $1,460 an ounce. And as the more precious it becomes, the more the population grows on the planet, the more it's going to be sought after and the more precious it's going to become, right? Because there's more people, right? So there's more of a demand. And what we're talking about at the end of the day, whether it's trading currencies, whether it's trading commodities, which is the two things I trade. I also trade indices, right? The S&P 500. But at the end of the day, what we're looking at, supply and demand. Supply and demand in the marketplace. And it's super important, right? Because there's not going to be a bigger supply of gold. There is X amount of gold on the planet, right? Unless a meteor full of gold hits the earth, or we find a whole new mine or something, which happens, but there's only X amount on the planet, right? So the more that the supply gets bought up and turned into jewelry, people got gold, and the less it becomes traded, the higher the demand for it's going to rise. So that's a great case to just think, hey, it's not a bad idea to have some gold lying around, or put if you can afford a bar of gold. The bars of gold you see in the movies now, you know what I'm saying, are right now priced at $50,000 to $55,000. So you can imagine having a table full of this. It'd be like $10 million. So, but anyways, I get off on a rant. This is when I learned this, man, it was my big moment where I was like, holy crap, this actually makes sense, right? It's not about the charts. It's not about the, it is about the news, but it's not about just trying to be like, where do I start? It's thinking about it on a logical level and using logic to create a bias, figure out the market sentiment, and eventually, hopefully, be consistent and at the end of the day profitable, which I would assume is why you're watching this, right? So, I've applied this to my own trading style. I teach it to my students, and we have a lot of fun doing it. So I hope you can join us, right? So if it's something that interests you, click on the link below or in my bio or maybe somewhere around here. I'm not exactly sure where it is, but and we can go more in depth into this in my training. I'm super proud of my training. It's great. I lay out all my strategies. But at the end of the day, I wanted to teach y'all something. I think this is a lot more informative than most free trainings people offer. Risk on and risk off, it's a super important part of learning to navigate the market. So that being said, I hope you all have a great day or night wherever you're at watching this. And one of my mentors, because look, I didn't become profitable until I had a mentor. One of his sayings is, don't just count your pips, count your blessings, right? So at the end of the day, we aren't the markets, right? We're just a part of it. We're interacting with it. So we're human beings too. So get out there, enjoy being human. Thanks so much for watching. I appreciate you. Peace.